Hello everyone, welcome back to Upside Down Data. Today I want to talk about DOT, what some of our indicators are making of its recent price action, and whether or not it might still be on track despite this bear market. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, put out a lot of updates about our risk indicators and more over there. So with DOT, obviously we've been in a pretty oppressive downtrend ever since the all-time high that we're able to put in back in the latter part of 2021. It's been this really nasty drawdown ever since. Really, the high watermark being when the Parachain slot auctions started, and we've more or less just been seeing down with some minor relief rallies ever since. So what can we think of when we're seeing this, and what are some things we might want to look for before we can turn more bullish again? So I want to start with an indicator we have here at the channel called the Momentum Bias Indicator, or MBI. If you're not familiar, this is an indicator that basically is trying to document the prevailing momentum in the market. So is the prevailing momentum to the upside or to the downside? And so that's what bias means, that if you're in a positive momentum regime, then any momentum pushes back to the downside, just quickly get reversed, pushed back up. Whereas if you're in a negative momentum regime, that's when any pushes to the upside just quickly get pushed down further. And so 0 is the average amount of momentum in DOT, and that's positive because DOT has overall been trending up with time. And then these are standard deviation units here. So one standard deviation above the mean, and then this is negative 0.5 standard deviation below. We've actually never hit negative 1 standard deviation below the mean, so that's why that's not showing up here on that axis. So DOT is, of course, a younger asset, so there isn't as much price history to look at. But even within this, we see DOT displaying some of the hallmark behaviors that we see the MBI displaying on other assets that can tell us what part of the market cycle an asset is in. When you see the MBI spending a lot more time in the green than in the red, like up through here, that's very indicative of a bull market. And that's indeed what we saw throughout this whole run in early 21. Then we flipped back into the red, and that would be, spending a lot of time in the red is diagnostic of a bear market. Then we spent time down there until we were able to reverse up into another bull market and then down. And what we've been seeing more recently is very, very reminiscent of bear market behavior that we see on the MBI with other assets. Bitcoin, Ethereum, a bunch of other assets we've looked at all show this kind of behavior where you spend a lot of time in the red, and then there'll be these occasional times where these relief rallies will show up that will actually peak our head above 0, try to reestablish a positive momentum bias. Then we get quickly rejected back to the downside, and usually more downside follows. That's exactly what happened here. And this is one of the things that I was looking for across multiple different assets back at this point, that when we were able to start reestablishing a positive momentum bias, would we just get immediately rejected back to the downside? That's what happened. And then indeed we saw further downside after that. So from the MBI's perspective, there's no real reason to be too excited about DOT until we can reestablish this positive momentum bias and not just immediately get rejected. One of the things we'd like to see is be able to break up well above 0 and spend time up there. That would suggest that we might be in a more of a bullish footing. We don't want to see these little pops-ups that immediately get rejected back to the downside. So currently we're starting to slowly chart our course back up. We'll have to watch this. If we can go back, break back above 0, that could be a positive sign from the MBI's perspective. Maybe we can start moving back into one of these types of footings rather than this very clear bear market signature that we're seeing right now. So that's the MBI's perspective. It thinks that DOT still has work to do before we should get especially optimistic about a reversal to the upside. But of course, with crypto, anything can happen. And so this isn't saying that can't happen in short order, just saying that it hasn't happened. And so as of yet, there's no reason to be especially bullish on DOT from its perspective. Now, another indicator that's useful to watch is their trend confidence indicator. So the way I'm displaying it is similar to the MBI, but it's actually getting us something quite different. So the trend confidence indicator trying to tell us how confident we should be in a given trend. So 0 is kind of the dividing line between bearishness and bullishness. And if you're in an uptrend and the TCI is green, that's great. That means you can have relative confidence that that uptrend will continue. But if you're in an uptrend and the TCI flips red, that is bearish. That means that a reversal is likely to follow. And indeed, you can see how the TCI was a leading indicator well in advance of this huge crash into the summer of 21. All the way back here, it was saying, be careful. This is not looking like a very convincing uptrend anymore. And then indeed, that's what we saw, that we just got this one tiny little peak back above 0, but really then crashed back down. For the most part, very bearish on DOT this whole time. But then you'll notice that the second then we started this reversal, popped back into the green all the way through. And that's really what the TCI is supposed to do. It's supposed to be acting as much of a leading indicator as possible. And you can see that even through this point, when there was some potential reason to be bullish, maybe some possibility of reversal was getting bullish again here. Then, of course, the whole Terra UST situation unfolded and everything, and we just capitulated back down to the downside. And now we're trying to chart a course back towards zero. But again, until we can really break above zero here, there's not a whole lot of reason to be especially optimistic from the TCI's perspective. Now, one of the nice things about this model is we can actually probe it, ask it what price level it would like to see to become more bullish. And it's looking at a little under $12. So, right now we're trading, around $9, I think, last time I checked. And so we're closing in, but we're still a little bit ways away. And so that's the level from the TCI's perspective to be watching, around the $11 to $12 range. Now, this is a dynamic level. This will change over time. So this very well might fall closer to where current prices are if we continue consolidating where we are, or certainly if price were to fall, I would expect this to start coming down with it. But right now, this is what it is expecting. It's thinking that we need to break this level before we can get especially bullish. So not to say that can't happen, obviously, but as of right now, it's a downtrend and we should believe it until, from the TCI's perspective, it's a downside and we should continue to believe it, at least for now. So that's obviously two bearish, outlooks that isn't especially hopeful in the kind of more immediate, short-term perspective of, are we going to, have we found the bottom? From these models' perspectives, there's no reason to believe that we've necessarily found the bottom, essentially. But there's other ways that we can look at this from a more macro perspective to ask the question, is DOT still on track, even despite this pretty oppressive downtrend, this kind of, largest bear market DOT has ever seen? This is already notably bigger downtrend from, the crash going into the summer. This downtrend has been more oppressive than that. So one of the other analyses we can do, though, and I put out a video about this recently, where one of the things we can actually look at in crypto is look at the average trajectory in terms of multiples of 10 across a bunch of different assets. So this is the average, this white line here is the average growth of crypto assets. And I excluded Bitcoin here. I got some great comments on that original video saying that because Bitcoin was the first mover, it might be kind of unfair to compare other assets to it. And so it might not make much sense to include it in this analysis. So for this one, I've actually excluded Bitcoin from this average. But every other asset that we follow for our risk indicators and things like that are in this average. And so, there's going to be a lot of assets back in here. So the x-axis here is the number of days the network has existed. And then this is just a log 10 price that's been adjusted so that everything starts at 0. And so the way you can read the y-axis here is that 1 is 10x from the starting point. So whatever the starting price was of the asset, this is, the 10x point. And this would be the 100x point here at 2. So, 0, 10x, 100x, 3 would be 1000x, etc. You're just basically multiplying by 100 each time. So as I mentioned, really, this is just the average trajectory. So you just take a bunch of different crypto assets, line them all up, and then average their trajectory together. This is what you get. And then this yellow line here is a regression line that fits the data. And interestingly, a linear regression line actually fits this data better than a logarithmic curve, which is interesting. Not super better, but it is better, so that's why I've chosen to use this. Over time, it's possible the logarithmic curve might end up fitting better, but for now, this seems to be the best fit. And so what this essentially can tell us is that for the average crypto asset, and granted, the average successful crypto asset, because I've used assets that have been relatively successful in the average to put this together, but the average successful crypto asset follows this general trend line, is basically what this is saying. And what's really useful about that is that we can just look and see at a given point in a network's age. So for example, at 1,000 days old, we'd expect the network to have at least 10x, around about 10x from its starting price. So on average, the given crypto asset, successful crypto asset, should 10x by day 1,000 of its network. And then, by 2,000, it should be getting up closer, and really by day 3,000, it should have cleared over the 100x point. Really by day 2,500, it should have 100x from its initial point. That's what this trend line is basically saying. And so what's useful about having this is that if this is really kind of this average expectation for successful crypto assets, you can use it as a benchmark to compare the performance of a specific asset that you're interested in this case, DOT. So that's what this purple line here is. So this is the trajectory of DOT that's just been lined up so that, you know, it starts at 0, and this is the logarithmic price of DOT. What you can see is that for the most part, DOT has been spending more of its time above the trend line than below. Really, it was only at the beginning of its life, and right now that it's been below this kind of average crypto trajectory, you know, regression line up here. And so what that means is that by and large, it seems like DOT is still relatively on track, right? You know, that it's still been kind of overall growing at a rate that we might expect from kind of the average crypto asset. That is kind of just more or less falling in line. Now, obviously, we'd like to see it kind of come back up, but I think this is where if one has a thesis about DOT, or one is really, you know, confident in the fundamentals, one thinks that DOT is going to survive any bear market it sees, and DOT will ultimately succeed, you might then expect it to more or less track, at the very least, track this kind of trajectory, this kind of average line. So even if we had to spend some time down here, you know, you might expect it to eventually come back and meet it, or even pass up above it, then down, etc., if it's just going to follow the average trajectory line. So that really comes down to your thesis, right? Do you think that DOT will perform as well as kind of the average successful crypto asset? Do you think it'll perform more poorly? In which case, maybe it won't follow that line quite as well. Or do you think it'll outperform, in which case you might actually expect it to pop back and spend more time to the upside? And, you know, there's certainly precedent of this happening. You know, one of the assets I wanted to show also is Ethereum. That's what this red line here. And you see that Ethereum kind of early on its life, at about the time of DOT, was actually not even performing as well as DOT was through that time, but then has now gone on to spend, you know, all of its time above this best fit average growth line for crypto assets. And so again, it comes down to your thesis on DOT. Do you think that if you think that DOT has strong fundamentals, that it's going to be a successful project in the future, then you might expect it to end up having a signature, at the very least, tracking this line, if not exceeding it, like something like Ethereum. What's also useful about this analysis is that we can say, you know, if it were to perfectly track this trend line from here on, you know, more or less follow this line, we can also then just make predictions about what the price should be based on that. And so one of the things that you can look at is 1,000 days into its age from its beginning. This would be around May of 2023, would be about 1,000 days after DOT launch, or at the very least, since we have price data on DOT. This would put price, if we were to follow this line, at around somewhere in the $20 range. So it wouldn't be putting it, you know, back up at the all-time highs, but it would be putting it us higher than we are right now. So if DOT were to just simply only be following this average trajectory line, we might expect it to at least reclaim some of these levels by a year from now, more or less, a little less than a year from now. And so that might mean that, you know, if you assume DOT will follow this line, that it is in an undervalued state from this analysis perspective. So, you know, none of this is gospel. A lot of it depends on what your thesis is on DOT. You think it's going to be able to continue to outperform the average asset like it did back here. But if you do, then it just gives some nice targets to look for as DOT gets older and older. So my overall kind of outlook on DOT, looking across these different indicators, is that certainly in the shorter term, I think a bearish outlook is very much justified. You know, DOT so far has not been showing any signs of a reversal. And frankly, that's probably going to be, you know, that's probably not going to happen until the rest of the crypto market stages a reversal as well. I doubt DOT will be able to decouple itself and go on a run when everything else is dumping, or at the very least consolidating at lower price levels. So in the shorter term, I'd like to see the MVI flip green. I'd like to see the TCI flip green. But when we look at these kind of more macro perspectives, or compare DOT to other assets, I think there is reason to be optimistic, and to think that DOT is still more or less seems to be on track based on what we'd expect from other successful crypto assets. So none of this is financial advice. You should form your own opinions about how to navigate the market. That's just what I'm seeing from these data. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.